You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, the program where we break down everything going on the other side of the options fence. Going to talk, who knows, ags, equities, metals, energy. You never know what's going to be on the show. So you have to tune in every week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Glad to see so many of you folks have embarked with us on this journey of Options Insider Plus, Options Insider Pro. A lot of great stuff coming at you, including our next dose of options oddities there tomorrow, as well as most of our live streams this week and everything else going on. You know where to go to find out more. theoptionsinsider.com/plus or /pro will get you there. /shop will also get you there. For both of them, you could see them both side by side and see exactly what's going on. And of course, however you listen, if you're coming on our Pro Legion, if you're coming in after the fact on demand, however you listen, keep those questions and comments coming. We do love to hear from all of you out there. Let's see who we're hearing from on the program today. First, we're going back out to the hopefully soon to be fenced FTSE Russell Studios, where we are joined once again by Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to the show, sir. It has been too long. Dare I say it, it has been a week.
It has been a week, and it's great to be back. I'm so excited for today's show. In regards to the fence, I have placed my order. So
there you go.
We can continue to fence watch from a construction perspective if you'd like.
It hasn't been built yet, so fence watch is still on, sir. We will not stop fence watch until the last board
Very good.
has been nailed into place. But Sean, I got a bit of bone to pick with you, sir. You're being a little bit stingy on the show today. You held down the Footsie Russell Studios to yourself. You wouldn't let our guest here join you in the studio. She has to come in via the CME Group hot seat. Who am I talking about? None other than Catherine Yoshimoto, the Director of Product Management over there at Footsie Russell. Catherine, welcome back to the program. I'm sorry Sean wouldn't let you through the fence into Footsie Russell Studios today.
It's no problem. I'm glad to be here. Thanks.
All right, and Catherine, as we are wont to do to get this movable feast underway, I will give you pride of place. You get to pick this week. Where should we begin our journey? To the light side or to the dark side, madam?
Let's start with the light side today.
Oh, I like it. See, Sean, I can see why you two get along so well. You're very simpatico as we kick off our movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show we break down what the heck has been moving and shaking over there at CME since our last show. If you want to follow along with this one for yourself, listeners, of course, you can't generate the report for yourself. That's only for the premium version, but CME usually tweets it out. We tweet it out as well ahead of the show, so you can see exactly what is moving and shaking to the light side and to the dark side ahead of the show every week. All right, let's kick it off. As requested, to the light side, number 5 this week, we've got Nat Gas up 2.3, almost 2.4%. It was number 4 in the exact same direction last week, up nearly 4%, 3.81%. So an interesting couple of weeks there for Nat Gas. WTI up 2.46%, so almost 2.5% for WTI. A little bit of energy to kick off our top 5 there. Number 3, live cattle. Back out to the livestock, up a little over 4% this week. Number 2, it's Bitcoin, up about 5.3%. It was number 2 in the other direction, off nearly 4% last week. And number 1, also out in the livestock realm, it's feeder cattle, up 7.11%. It was number 3 in the other direction last week. Now let's head on out to the dark side, listeners. Number 5 to the dark side, it is KC Wheat, off 6.5%. It was number 5 in the other direction, up 2.64%. So it's been an interesting couple of weeks out there on the ag front. A lot of tug of war, a lot of upside and downside. Will they, won't they? This week, back to the won't they, back to the dark side again. Number 4, right back out to the livestock again with lean hogs, off 7.3%. So an interesting tale of two different markets. Feeder cattle up 7%, lean hogs off more than 7%. Number 3, it's the beans again. Soybeans off 8.3, almost 8.4%. Number 2, aggressively number 2, it's soybean oil off nearly 16%. We just broke that down on the show last week here, and that was number 3 in the upside direction last week, off 16% this week. That's not even enough, listen. That's not enough for the number 1 spot this week. You have to be off more than 16% to get the number 1 spot to the dark side. Luckily for Sean, it's lumber, off 17.5%. So hopefully maybe he can apply for a little bit of a discount on his fence because he bought it last week. But lumber down yet again this week, Sean. I told you, once you bought that fence, that was it. We're heading to the bottom, I should say, for all things lumber. It was number 1 in the same direction last week, off 13%. So you're talking off a whopping 30% just in the past 2 weeks. So an aggressive couple of weeks for lumber. Before you ask, we've talked about it before, this does a handful of contracts a week. So we can't really parse lumber this week. But because we have Catherine joining us so patiently out there in our guest seat this week, we're going to kick things off in her neck of the woods. Time to talk a little bit of equities.
Explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, let's get to it. Time to talk equities. You know how we kick things off. We like to set the table, looking at things from a volatility perspective, a bit of a topsy-turvy equity volatility landscape coming into the start of the show. RVX, a.k.a. the VIX of the Russell 2000, was pretty much unched from where it was this time last week. It's about 23.25. It's about a 1/10 of a point difference from where it was this time last week. So RVX still flirting with the low 20s level. Can't quite break that 20 handle. VIX at about a 17.25 when we kicked off the show. That puts it up about a point from where it was this time last week. This little bit turbulence out there in the equity markets today, listeners. VVIX at about a 120, almost exactly, puts it up a little over 3 points. 120, if you were paying attention over the course of the past year, listeners, was kind of the floor for the volatility during most of the pandemic era. So when we broke it to the dark side a few months back, that was a big sign. Now we're back up to those levels. I'm not saying we're back up to pandemic volatility by any means, but that 120 level is a very important symbolic level in the volatility of volatility, and one that is worth watching. And VolQ, aka the at-the-money vol of the NASDAQ 100, aka the newest addition to the vol trading pantheon over there at CME, at about 16 3/4, down about a quarter of a point. It was about 17 last week, about 16 3/4 this week. So that puts that VIX to RVX, aka the large cap to small cap vol spread, at about exactly 6 points coming at short time, about half a point wider than it was this time last week. Again, RVX hasn't moved, so most of that is VIX kind of moving around there. And the VIX to VolQ, so the S&P 500 to the NASDAQ vol spread, about half a point. That's actually a little bit tighter, about a third of a point tighter than it was this time last week. So, Catherine, that's a lot of table setting here, but there's a lot to talk about in the world of equities, in particular in the world of small caps. You guys have a little bit of a big event coming up pretty soon. Why don't you give our listeners the lay of the land? What's coming up in the world of all things small caps, Catherine?
Yeah, absolutely. So we are in the Russell reconstitution period this month. Actually, it started with Friday, May 7th, which was rank day, where this is the day that all the information to determine the new index membership in the Russell indexes is used. So companies must be eligible as of this May 7th rank date. On June 4th, after the close, we posted the preliminary index additions and deletions list to the FTSE Russell website. And then we've been updating those lists on the following Fridays, on the 11th, and the next update will be tomorrow after the close. We are in the lockdown period now, so the index additions and deletions lists are considered final. The week after the preliminary announce date is the query week, so we're past that phase now. And finally, reconstitution will be final after the close of Friday, June 25th, effective at the open of June 28th. Last year, and the year before, over $100 billion traded at the close across NYSE and NASDAQ exchanges. So we do anticipate that this year will also be a big event. However, I think, Sean, you might have some stats about June typically being a lower volatility month, and it goes also hand in hand with the transparency and the communication that we provide to the market so that we can have an orderly Russell reconstitution.
Exactly. Can you hear me?
Yeah, go for it, sir.
Oh, awesome. Exactly. FTSE Russell historically has picked June as the month for reconstitution, beginning with May Day, rank day, May 7th this year. But June is a historically lower volatility month, and volatility doesn't play too much of a factor in reconstitution for the reasons that Catherine just explained, but also this transaction, is, as Catherine mentioned, happens at the closing bell in the final milliseconds of trading on June 25th this year. So it's an auction on NYSE, and it's a closing cross system at our partner NASDAQ, which pretty much eliminates there being any kind of volatile moment within the stocks, as this is an instant transaction, which really does eliminate that volatility that people seem to ask about every year.
They do ask about it. They asked about it last week. So I have that same question. Maybe you could talk about it a little bit later. I think we wanted to save it for Catherine this week as well. But Catherine, we touched on this. I remember you joined us on the show last year to talk about last year's recon. A lot has happened in the market. A lot has happened in the audience of our network and of this show since that time. Of course, we've seen this retail explosion in the marketplace, and they have discovered many new products that they probably weren't paying attention to a year ago. Many of them discovered the options world for the first time over the course of the past year, and since then have been lured out into a variety of different products, the volatility space, the meme stocks. A lot of them, particularly after the election last year, really started paying a lot more attention to Russell 2000, because that's, of course, when everything kicked into high gear out there and it really started outperforming the rest of the equity market. I've seen more interest. I've seen more questions, more comments, people coming in asking about Russell 2000 since that period than I could ever recall in the earlier periods on this network. People coming in asking specifically about the small delta calls, getting really excited, viewing Russell 2000 almost in that meme stock category, going up and just loading up on the far out of the money calls. So there has been an enormous influx of interest and new participants who are suddenly paying attention to Russell 2000 for the first time, Catherine, that weren't doing so a year ago when you were talking about this last time. So for that enormous new audience who is kind of tuning into Russell 2000 now for the first time, why does Recon matter to them? Why should they pay attention to this event, Catherine?
Yeah, absolutely. Recon matters because we have an objective process to make sure we're calculating accurate benchmarks for our clients and those who track the indexes. Absolutely, this past year was a phenomenal year. Following the COVID crash in 2020, if you look at our historical breakpoints in 2019, it was 3.6 billion. The largest company wasn't even it hadn't even crossed $1 trillion. Last year, the breakpoint dropped to 3.6 billion. The breakpoint, I should explain, is the breakpoint between the Russell 1000 and Russell 2000 indexes. So basically, essentially where the cut is made between large cap and small cap. So it was an interesting year last year because it was a story of divergent markets. The largest company was $1.4 trillion last year. However, on the lower end, at the bottom of the small cap index, the Russell 2000, the smallest company was below $100 million for the first time in a decade. So it was interesting. And for all of that, as you say, there's been an influx of retail investors paying attention to the market and just the market recovery in general. This year we have 4 companies crossing the $1 trillion mark. And the breakpoint between the Russell 1000 and Russell 2000 is at a record high at $5.2 billion. The bottom company in the Russell 2000 is at $257 million, so more than double last year's smallest company. So indeed, it's been an interesting year, lots of attention being paid to the, index changes and additions and deletions. Typically, I don't talk about specific names and we just talk about the Russell 3000 additions and deletions up until after the market close, when you'll see the new Russell 1000 and 2000 index membership list. However, you can already see the new names that are being added to the Russell 3000 on our website in the additions. DoorDash is a new ad, DraftKings is a new ad, Big Five Sporting Goods. For various reasons, some of them are newly passing voting rights or being reclassified as a Russell US company. And then 43 IPOs are being added to the Russell 3000. Half are healthcare companies, and 5 of those are going into the Russell 1000 index. So definitely interesting year, lots of interest, but all the more reason why we want to continue with our objective, transparent process, communicate to the markets. You can even find our breakpoints, banded breakpoints on our website. If you go to FTSERussell.com, there's a reconstitution page where you can find the resources on our website.
Well, Catherine, a little birdie may have told me that last week you held a webinar on a topic that is near and dear to my heart, which is, of course, the role of derivatives and what role they play really in and around Recon. So you were the moderator for that session. Any interesting takeaways, any interesting nuggets from that session you'd like to share with our audience?
Yeah, we were pleased to have as guest speakers from Cboe Options Institute, Kevin Davitt, and CME Group, Giovanni Vicioso. They provided some interesting insights on how to use futures and options leading into the Russell reconstitution, hedge risk, all that good stuff. So if you go to brighttalk.com and search Russell reconstitution, it's the first webinar, as you mentioned, from June 11th. So I encourage you guys to check it out.
There you go. So it is available on demand. We'll make sure we put out a link to that out there as well. Sean, I know this is near and dear to your heart. Of course, the role of derivatives is pretty much right in your wheelhouse. What are your thoughts on everything Catherine just laid down and the importance of this? Because you've seen this. You've been interacting with this new audience for nigh on a year now on this show. You've seen what they're interested in. So what are your thoughts on why this new audience should pay attention to Recon, as well as some of the interesting nuggets about the role of derivatives in this big event, sir?
You know, Catherine, you did just a fantastic explanation of Recon and breakdown. So I just wanted to compliment you on that, number one. Number two, the webinar, Mark, I'll send you the link so your listeners don't need to search for it, and you guys can blast it out through your different communication channels, so that our audience can find it quickly rather than search for it. But Catherine's right. You can go to Bright Start and just search under Russell Recon, and the webinar will come up. But Kevin Davitt from the SIBO and Gio Vicioso from CME did a great job. Catherine's not complimenting herself there. She was the moderator of the webinar itself, and it was just it's just full of information on using derivatives around the Recon itself, and there's just plenty of opportunity for our listeners to really learn more about reconstitution itself, but two, see the role derivatives can play for an individual investor all the way to an institutional investor. So some of the strategies and trading scenarios discussed are big transactions and can be down to the smallest of transactions. And using the micros at CME and the mini Russell options as well, which were some of the examples that were discussed, are things to pay attention to when you listen to the webinar. And we'll say it at the end of the show, but any questions, you know where to reach us. But as Catherine also said, the FTSERussell.com website has just a plethora of information on Recon itself. So please go to the website. That's all I wanted to add.
Well, let's dive into some of that derivatives activity. You folks, as always, can play along with the home game, cmegroup.com/TWIFO, TWIFO, or /TWIO this week in options. Both of them should get you to this landing page. Go to that drop down for equities, pull up the Russell 2000, and you'll be off to the races here. Coming into showtime, we're seeing Russell 2000 at about a 2285. That's, again, bit of a rough week, bit of a rough day out there for all things small cap. They're selling off over 1% today, and they're off over 2% on the week, about 2.1%, nearly 50 handles. So Russell 2000 giving back some of that upside out there of late. A lot of action out there in that contract that's going away in less than a day now. That's that June monthly contract that has less than a day to go. Now, that's about 41% of the paper. So we won't be hanging our hat out there. It's kind of hard to parse volatility and skew in a contract with less than a day to go. Instead, we'll go out to this week 3 July contract that has about 25% of all the paper this week going up. By the way, pretty active week out there in the Russell 2000 over there at CME. If you're wondering what is the vol out there in that week 3 July contract, right about a 1980. It's actually ticking up about 1.5 points. So we keep saying, can RVX break 20 to the downside? That's, of course, a 30-day vol measure with a little bit of skew thrown in there. If you go a little bit beyond that out to this July, which is at about exactly 30 days, it is a little bit below 1980. So interesting to see if RVX will follow suit out there or not. Of course, today's sell-off probably going to juice that up a little bit. In terms of skew, last week the puts in the July contract were 13.5% rich, the at the money. This week, 15.3%, so getting bid up nearly 2 points. The calls last week, 9.5% cheap. This week, 11.5% cheap. So the call is coming in 2 points. The puts gaining 2 points here as we're selling off. In terms of the most active contract, you folks are always asking us, what about the small delta calls? What about the small delta calls? It was not calls this week. It actually looks like it was almost exactly a tie, 36 contract difference between the August weekly, the week 3 August out there, 1760 puts, and the 2300 puts going out tomorrow in June. Both of them are doing almost exactly the same amount of paper. It looks like August took it ever so briefly by 36 points. So we'll go out there as well. 1760 puts. Not a strike I would have assumed. Again, we're at a 2285, but this is kind of maybe hearkening back to some of that older school paper we used to talk about here in the Russell 2000 when it first got added on out there to CME. We saw an enormous amount of interest in farther out of the money puts. For whatever reason, that seemed to be where a lot of the paper lined up. And this 1760 put action would seem to fall into that same type of pattern out there. But the 2300 puts also pretty active going out tomorrow. These are now in the money puts, so they were small delta a day ago. These days, now a little bit meatier out there. Not a lot of action on the call front, which is what people are usually asking us about. What about those small delta calls? What about those small delta calls? So far, at least, we're not really seeing a lot of interest in those. It's pretty much all puts. But then again, we are seeing a pretty pronounced sell-off out there today and have been for most of the week. So probably why puts are leading the dance. So everyone out there who keeps asking us about small delta calls, not so much this week out there. But again, I think the prevailing market conditions have a little bit of something to do with that. So longer term out of the money puts and very near dated puts that are now in the money kind of leading the dance out there in Russell 2000 this week. Interesting stuff. Catherine, we could talk a lot more about all things FTSE Russell. We have to squeeze on some other products, but don't worry, I think we have some listener questions about it, so we'll be coming back to it in a little bit. But before we roll on out of the equities section, anything else you want to leave our listeners with?
Yeah, just that, Russell Reconstitution again is one of the most anticipated and orderly index rebalance events. We want to make sure our process and methodology is transparent. We communicate with the market into what's changing. So look out for the June 25th close. We'll be celebrating with the NASDAQ virtual closing bell. And then effective at the open of June 28th.
All right, Kathy, you get to take a little bit of a breather, not too much of one, because we have some listeners who want to get at you in a little bit. But first, we have to keep on rolling into our next product category. We have energy lighting up a lot of our light side this week, so let's hang our hats out there next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, let's get out to it. You guys know how to find this. CMEGroup.com/TWIFO. Go to the energy dropdown and then go on out to WTI. WTI is outperforming nat gas a little bit this week, so we'll give them pride of place here on the show. It's also the product I know a lot of you out there are interested in these days. Still north of the 70 handle this week, getting a little bit of a lift back up there, up to about 70, almost 71 in that front future out there in WTI. So people have been looking at that 70 handle for a while. We just had in our pro Q&A earlier this week, Mr. Dr. Vix, a.k.a. Russell Rhodes. He also watches a lot of vol and the energy products and everything else, looked like the skew was saying people were fading that 70 handle and thinking we were going to drop back down. That certainly is what the skew was saying. But still this week, net so far from Monday up about a third of a point. So most of that 2.5% rally came on the heels of our show last week out there. In terms of where the action was this week, looks like about a third of the paper, about 34% came in this August contract. So we'll hang our hat out there. The volatility out there still pretty frothy, right around a 31 in all things a WTI. It's up about a point from last week. So it's been kind of hovering around that 30 level for a little while and getting a point back this week, going up to about 31 and a third or so. In terms of skew, the puts last week were about almost 8.5% rich last week. So quite a hefty bid to the puts. Not quite as much this week, 7.8%. Still hefty, but coming in a little bit. The calls last week, 4.3% cheap. This week, a little bit less cheap, 3.3%. So the calls getting a little bit of not quite a bid, but a little bit less cheap, I think is the best way to describe that. In terms of where the action was, we've been flirting around that 70 handle for a while, so you'd be forgiven for saying it was the 70 calls that won the dance, and you were correct. Only it wasn't in our August month. It was actually out in the December expiration cycle where the number one most active contract happened. It was the DEES 70 calls, nearly 30,000 contracts on the tape. By the way, if you're wondering how much paper going up in WTI this week, 482,000 contracts on the tape as of right now. So closing in on 500,000, a pretty active week for WTI. And almost all of this paper in the 70 calls came today. 26,000 of the 70 calls going up today versus only a couple of thousand going up the rest of the week. That's interesting. Looks like may have been a 1x3 60 70s. It kind of lines up 8,200 of the 60s going up this week as well. So maybe a bit of they love their ratios in gold and in energy as well. And it seems like maybe a 1x3 kind of lines up there, 8,200 of the 60s and 26,000 of the 70s. So again, not quite 1x3, but pretty darn close. Both of those strikes not really doing any other paper the rest of the week. All of that's coming pretty much today. Total about 8,500 of the 60s traded throughout the week. Now let's go back to August, where the lion's share of our paper went up this week, and it was the AUG 75s that were the most active out there. So if 70 is not bullish enough for you, we're going to go out to 75s next. 13, almost 14,000 of those going up this week. The most active days were Tuesday and Wednesday, nearly 5,000 on Tuesday, 4,000 on Wednesday. Both of those days pretty much closing 3,800 going up today. So 75, perhaps a bit of a bridge too far, which is why folks were taking a lot of those off out there this week. But it wasn't all calls all the time. Some puts also lighting things up to the tune of the 65 puts also out here in August, doing nearly 12,000 contracts here this week. So a pretty active week out there in all things 65 puts as well. So interesting stuff. Let's look really quickly. We like to scan a little bit farther out here as well in the metals to see, in the energy. And yes, there is some interesting paper a little bit farther afield. Let's go out to DEES of 2022, listeners, because the 120 calls in DEES of 2022, pretty active last couple of days. 3,850 yesterday, all of that opening, and then 3,850 again today. The exact same amount, total of 7,700 going up. Closing today, that would be strange if you open in DEES upside of 2022 and then take it off the next day. So I'm going to guess that's probably additive. So 7,700 of the 120s. The pars, the 100s, also pretty active out there today. Nearly 6,000, 5,900 going up today. A total of nearly 7,000 have traded all week. And also the 110s going up 3,000 times. So it looks like maybe a bit of a fly, listeners. We've got but funky ratio there. About 6,000 of the pars, the 100s, about 3,000 of the 110s, and 3,800 of the 120. So the ratios aren't quite 1x2 out there, but still interesting stuff nonetheless. Also some, far out 42 half calls going up as well. So we have some strange things afoot in DEES of 2022, but that upside kind of ratio vertical, I think, merits a little bit more attention. Reminiscent of some of the weird 1x2s, 1x3s we've seen going up in products like the metals out there. But we're also seeing a lot of dark side out here in the ags this week, including soybean oil and soybeans selling off pretty aggressively this week, as well as wheat. So let's hang our hats out there in the ags next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, let's do it, everybody. You know where to go. Go to that drop down, same place, cmegroup.com/TWIFO or /TWIO. Then go to the ags drop down. We could do soybeans. They do more volume, and they're off 8.3%, but the soybean oil is getting annihilated, off 16%. So we may have to hang our hat out there again this week. A little bit less active contract, about 80,000 contracts on the tape. So it's not nothing by any means, but it's also not quite a WTI or even a soybeans out there, but still a pretty active contract and a pretty down week here. They're already this week, they are off 15.5%. So most of that sell off in soybean oil came from Monday's session on out here. And in total of 51% of the paper going up in this July contract. No real weeklies out here in the soybean oil. So it's really just the monthly contract. So it's within our frame of reference, but it's got about 8 days to go. It's usually I like to go out 2 weeks, but because so much paper is going up out here, I think we'll have to make do. By the way, if you're wondering, again, take this number with a grain of salt because it is a weekly now, but that volatility on that July contract that has 1 week to go in soybean oil is at a 122 right now, gapping up, 80 points. So again, that's mostly gamma now because the contract that has about a week to go, but still, that's a pretty lofty, you're talking Bitcoin levels now for soybean oil, which makes this product perhaps a little bit more interesting for you folks out there. In terms of skew, The puts last week, 7.9% cheap. This week, 3.5% rich. So getting bid up quite a bit. The calls last week, 28.6% cheap. My goodness, they were cheap. This week, all that gone. It's 1.5% cheap. So they got pretty much bid back up to even out there. So a lot of action out there on the call side and on the put side. The number one most active contract in this busy week here for soybean oil are the 70 calls, doing about 2,500 or so total this week. The most active day was actually Monday, about 1,100, going up most of that opening. Got about 750 going up today. It's like maybe a vertical 70, 75, because the numbers kind of line up, as well as the 77. 1,400 of the 77s and 75s both went up this week as well. So maybe a 75, 77 vertical, and the 70s just getting outright traded. Either way, a lot of call action here, probably accounting for that big change, given the fact that they were so cheap last week and now are pretty much even. Going to go out on a limb and say someone was probably buying this vertical and buying some of these outright as well, because this call wing got boosted aggressively over the course of this past week, which is interesting given the fact that we are selling off so aggressively. We're shy, by the way, 56.5 right now in that front future list. It's off about 10.5 handles. So well shy of that 70 handle. It looks like a lot of opening paper on the 70, 75, and 77 strikes with exactly about 8 days to go. So not exactly the paper I would have predicted coming into this segment, but that's why we do the show, right? We look to find some of these interesting nuggets of information. Also, 69 puts pretty active this week as well. 2,200 of those. Most of those were actually closing. So those puts getting bid up. Looks like there maybe were some short puts on the 69 strike. Paper coming in, buying them back to close. Either way, those puts got bid up this week. And a lot of closing paper on the 69 strike and the 65 strike, about 1,700 or so going up out there this week. So a pretty active week out here in soybean oil as well. But I can't keep you folks waiting anymore because you have a lot of great questions and a lot of great product categories you want us to get to. So without further ado, let's keep on rolling into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment. It is, of course, the Futures Options Feedback segment. You folks have a lot of interesting things on the tape here for us. Let's see what you guys have in store for us here. Let's go on out first. This one, here we go. We actually saved this one for you from last week, Catherine, because Sean thought it might be a fun one to discuss when you were on the show. So we kind of punted on it last week. This was a question from Aaron P. He wanted to know, are there any studies about the impact of the Russell reconstitution on volatility? I know the event itself takes place after the close, only lasts for a fraction of a second. I'm more interested in the days leading into and coming out of it. I would imagine a large change in the constitution of the index would have some effect on volatility. So you kind of touched on this earlier in the show, Catherine, but let's hit on it again for our listeners because they're obviously very interested in all things volatility, particularly as it pertains to Russell 2000s. We have to say here for our listener, Aaron, who wants to know about the impact of recon, not immediately, but more in the lead up and in the coming out of the big event, Catherine.
That's an interesting question. Sean alluded to some studies that have been done in the past in terms of the volatility for the month of June. I'm not sure that I have anything readily available going into and out of in the days into and out of the reconstitution, but that's also why, as Sean alluded to, we have the closing cross mechanism to reduce the volatility at the close. No, absolutely. Active managers, we don't tell them how to manage their portfolios, right? So they have the ability to manage toward the changes leading up to or after So this might be an interesting question to maybe pose to some of our like product issuers, like ETF partners and other exchanges. But yeah, certainly we could look into it. I don't have anything off the shelf, but yeah, interesting question.
Sounds like we have a new research project, perhaps a new webinar in store for us, Catherine, down the road. Maybe the lingering impacts on volatility of Russell 2000. What do you think?
Yeah, we'll take a look. I think maybe Sean, do you have any thoughts to add to that?
Yes, I'll just add just a quick note as well, Catherine and Mark. You know, the webinar that you hosted and moderated last week, Catherine, answers a lot of these questions for our listeners who are just concerned about volatility during recon itself and the ability to use derivatives around recon. So I strongly recommend the listeners, tune into that webinar that took place last week. The recording is very clear, and it's a fantastic webinar to show you different ways for you to trade around recon without losing exposure or concerns with volatility swings in the marketplace. It's a fantastic webinar moderated by Catherine, and we have our guest partners from CBOE and CME on the show. So just wanted to quickly note that people should definitely listen to that.
There we go. All right. Next up, we had a question on our last show, which was from one of our pro members over there, Mr. Unlimited. He wanted to talk about metals a little bit, so it seemed like a good topic to actually save on this show. He also sent in a link from some analysis story coming out of CNBC, because whenever we're talking about the commodities out there, in particular, some of your raw materials like your copper and others, the story is always about Chinese demand. And traditionally, for the better part of the last decade, China has been gobbling up all of these materials pretty much whenever it can. The story coming out this week now is that China is planning to release some of these, what they call their strategic reserves of these, to help stabilize some of the insane run-up we've seen in the prices of these, and from copper to aluminum, as our British friends say, aluminium, zinc, and others. They say it's the first time in a decade that they're turning from a consumer of these to actually releasing some of these back onto the broad market out there. They say they plan to do it in the near future via a public auction. So since Mr. Unlimited asked so nicely about looking at some metals, let's do just that. Not going to go to precious right now. Let's go out to that same drop down, listeners. Go out to the metals, and let's go to the base metals, because you can't really talk Chinese demand and raw materials and metals and not really talk about copper. It's kind of the main story. A pretty active week out here for copper, about 30,000 contracts on the tape. So again, it's not a euro dollars, it's not even a WTI, it's not even a soybean oil, but it's become more active. This is a product that a few years ago would only do a few thousand contracts. So 30,000 contracts, that's roughly a 10x increase over the course of the last few years. So we have seen more action, more interest in copper options over the course of the last few years. Again, a lot of that driven by the will they, won't they dance of Chinese demand, which is currently right now in the won't they phase. Copper right now coming into the show 4.18 and a half. That's off about a little over a third of a point, or about 7.75% just since the start of this week. So obviously it was a little bit of the movement last week that kept it off of our bottom five for this week. Obviously, otherwise copper would have been in there definitely. In terms of where the action was this week, it was in the SEP contract. Again, no weeklies in copper. That did about almost 31% of the paper this week. The vol also getting a bit of the lift out there, as you probably would expect. The vol is about a 26.5, up about almost 2 points from this time last week. So decently volatile, more volatile than your average equity outside of the small caps, which are still averaging around a 23 or so. So they're the closest thing to it. But so if you're looking for a little bit of juice, maybe copper isn't the worst place to look. It's not exactly a Bitcoin either, but a little bit more volatile, a little bit more frothy than some of the other products we're talking about here today. In terms of skew, last week the puts were 5.6% rich. This week, 4.4%. But again, we have sold off a bit, so we have broken through some of those strikes. Not exactly super surprising that we're not seeing a huge bid. But then again, maybe that lack of a demonstrable increase in the bid to the puts may be showing that folks think China's going to sell a little bit, but perhaps not a ton, not going to flood the market, because we're not seeing an enormous bid springing into these puts here this week. Calls last week, 3.3% cheap. This week, 1.1% rich. So a bit of a swing to the calls as well, getting a little bit up. In terms of the most active contract out here in copper this week, it was the SEP 4-quarter puts, which is interesting and not perhaps the strike I would have picked. That was an in-the-money put till not too long. Actually, an out-of-the-money put till not too long ago. Now it is an in-the-money put here as we have sold off heartily this week. Again, most of that paper is going up today. About 2,200 of these have traded all week. Almost 1,400 going up today, about 700 on Tuesday. The rest kind of scattered throughout the week. So a lot of paper piling in to these 4-quarter puts in September just today. So again, that news kind of hitting the wires this week, probably driving a lot of that put paper. But it wasn't all puts all the time. If we go on out to Jan of next year, the Jan 6.5 calls also surprisingly active, doing 1,000 contracts this week, almost all of that opening, and they traded on Tuesday. So someone coming in to the Jan 6.5s. Interesting. 1,000 of those. That's pretty decent paper for a contract. Let's look at the skew really quickly to see if those calls got crushed out there in Jan. No, the calls got bid up. So potentially opening buying paper on the 6.5 calls in Jan. There's a lot of paper going up that same week. We saw 250s across the board of the 6 quarters, 6.5, 6.75s. Seems like there was maybe some very strange stuff afoot out there, maybe some weird flies. They were trading the 5-quarter calls all the way up. So it was kind of a big call strip that went up on that Tuesday. So kind of hard to intuit exactly what the heck they were up to, but still a strange strike, not one I would have assumed would have been very active out there in a week when China announces they're going to unleash a lot of copper out there on the market. So there you go, Mr. Unlimited, a little bit of talk about all things metals out there. We have more questions here about the metals. We've got my boy Luigi, another one of our pro members in the live chat there, asking, is there a good metals ETF? I have a position in DBC, but I don't have a futures account. So is that a good way to gain exposure? Well, obviously, when we talk about metals ETFs, that is traditionally the realm of your GLDs and your SLVs, right? We like those for a variety of reasons. They're liquid, they're very accessible to a lot of people, and they hold the physical. So they don't have the roll yield issues that a lot of these other ETPs out there do, like your VXXs or a lot of the ones that try to replicate commodity exposure using baskets of futures. They have the same problem, that same roll yield. If the product normally has a contango, that's going to come back to bite that ETP. So you're talking about here, your DBC is your Invesco DB Commodity Index Tracking Fund, selling off today, as you might imagine, about 18.5, off about $0.50 or about almost 2.5% out here. This is not a fund I paid attention to that much, Luigi. So I'll have to check it out and see exactly what they're doing. I have to imagine if they're trying to replicate a basket of commodities, they're doing something with the futures. So it may have that same roll yield type of issue, but I can't speak to it directly. I haven't had a chance to analyze it myself. I'll take a look at it and we'll see. But obviously, I know for a lot of you, it's still easiest to get exposure to these through a lot of these ETPs. Unfortunately, the downside of that, if you're not doing the direct product, if you're not doing WTI, if you're not doing copper, whatever it is, if you're doing these other basket products, they're going to have usually some construction issues. And so I'll have to check out. Also have to see what type of liquidity we're talking about out here on these. If you're trying to trade options on these, which I know a lot of our audience is, how liquid, if any, the options are on DBC. All right, moving on out to a question here from Eddie T. Sean, this is kind of what you were just talking about on the show last week as well. Eddie T wants to know, are CME ever going to try to make Eurodollars more palatable for self-directed traders like myself? Maybe a mini or a micro. I'm trying to watch these markets, but it's extremely difficult to trade them in my account. Well, good news for you, Eddie. Not quite Eurodollars, but it's something along these lines. Again, Sean was just talking about these last week. CME announcing exactly a week ago on the 9th that they're going to launch micro treasury yield futures. The micro 2-year, 5-year, a 10-year, and 30-year yield futures. They're going to be cash settled. They hope to have these effective on August 16th. So coming up in a couple of months. Obviously, anything with contracts is subject to regulatory approval. But this is kind of the continuation of that trend we've seen in the equities to great success, but also in other products. Everything small is big. Micro is where the action is at these days for a lot of these products. So it makes sense to have something a little bit more bite-sized for that same audience I was talking about at the top of the show that have discovered options and as a result discovered a whole spectrum of new products for themselves to trade over the course of the past year. Give them something to trade too. So adding these micros, I think makes a lot of sense. Sean, I know you were talking about these last week. The news was just breaking. You're an old school rates guy. What do you have to say for Eddie T? You're also an old school Eurodollars guy. A, what are your thoughts on these micros coming? And then B, do you ever think the ultimate institutional product, aka Eurodollars, do you ever think we're going to see a micro of that, sir?
Well, I think I commented last week that it sounded to me like the other asset class leaders at CME are getting jealous of Tim McCord on the equity side because of his success with all the micros that he's launched, from Bitcoin to Russell and the other equity suite of products as well. Micros have just exploded in volume and open interest. And, it's not just the retail sector trading these markets. Institutional traders have the ability now to customize granularly their hedge down to the penny. Those that are investing in equities can granularly equitize to the penny. There's always, because of large notional value contracts, the inability of the investor community to take every penny of what needs to be in the market for them to fully equitize an inflow of cash. But now with these micros, institutional investors are able to do that. But with that added volume, the retail investor has just a tremendous experience getting in and out of these markets and being able to trade them. And it's a fantastic smaller notional contract that the customer base, the retail and the professional trader base are comfortable trading from a notional size, from a margin size, and it's massively liquid. So I'm not surprised to see the micro treasury futures. Again, portfolio managers on the rate side are going to have just a fantastic way to granularly hedge their portfolios. But it's another one of those products that, retail investors see the interest rate discussions on CNBC, and they're always wondering, well, how can I get into that market? Well, now they can with a smaller notional contract that they could be a little more comfortable trading. But as I always say, make sure you know your product. Make sure you educate yourself before you start trading futures like these. And the best place to go is clearly, in this case, CME's Education Center on their website. Just make sure you understand the product. But Eddie T, you're on this because clients are asking for smaller contracts. I wouldn't be surprised if you see micros come across a lot more asset classes across products at most exchanges, not just CME and CBOE. I see this evolution continuing.
All right, everybody. That music means we're coming to a close. But before we go, one more question. That's a perfect way to rotate us out here. It comes in from Scott. Catherine, it's a good one for you here. And Sean, you could obviously chime in as well. Scott's question is, what does the future look like for Russell futures and options? Any cool new products on the horizon for us to look forward to? So, Catherine, we always like to leave our audience wanting more. So first off, well done on the old hot seat today. And then B, if you have anything you want to add, any hints, any teases into what's coming down the pike for our listener, Scott, Catherine, now is the time. The floor is yours.
Well, the new product developments on the futures and options side, I think Sean might know more, but certainly there's a lot of interest, especially after the past year. Small caps and micro caps have done pretty well, or very well, I should say. And, we're also, with this reconstitution, we are looking at adding an additional 450 names. So that's a lot more microcap names that are going to be in the Russell Microcap Index than in the past several years. So it's really exciting time. Again, I don't know about the product development side with the exchanges, but Sean, you might have some insights into that.
Mr. Sean, anything to add here for our listener, Scott? He wants a little bit of a glimpse behind the curtain and what's coming down the pike on the futures and options front at FTSE Russell, sir?
Great question from Scott. And I'm agreeing with Catherine, but I will say, and I know I've said this before, but before I say what I was about to say, Catherine, you mentioned microcaps. We had a question a couple episodes ago, maybe 3 or 4, Mark, that someone was asking about microcaps. So it's funny you ask, and my answer is an answer that will answer the questions about new products, something behind the curtain, as you mentioned it, Mark. The CME is very good at listening to clients, and they respond to client demand. So if there's a demand for a product, CME will do their analysis, and so will SIBO. They will do their analysis. If there's an opportunity for a reasonable product that the clients are looking for that really provides a solution out there that makes sense for the market to have, our partner exchanges are very good at launching products that are relevant to the community and provide a solution, provide a hedge, provide a tradable way to for customers, for investors to make that statement or transfer that risk that they need to within a product set. Our exchanges are just very, very good at that and launching successful product, as we very well have seen over the past year with everything Tim McCourt and the CME Group and SIBO have been very busy doing. So I hope that answers Scott's question.
There you go. Well done. Hopefully that answers your question there. Mr. Scott, of course, you know where to go for more. We already sent out the link to that webinar, so if you want to check it out for yourselves, hear all the discussion and analysis of using derivatives in and around recon, check it out for yourselves, and you know where to go to learn more. FTSERussell.com. Give them a follow on the old Twitter while you're at it as well, just at FTSE Russell. And of course, you know where to go. Check out the reports for this show and everything else we do here. CMEgroup.com/TWIFO or /TWIO. Both of them will get you there. And then you can go off to the races, check out the education, the research from Blue and Eric and the rest of the team. You can keep yourself busy for hours over there. But begin your journey. CMEgroup.com/TWIFO is the place to go. And on behalf of everybody over there at CME, and of course, Sean and Catherine holding down the FTSE Russell studios this week, and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing. So don't worry, we're not done yet. We're coming back at you tomorrow. Volatility Views, noon Central, 1 p.m. Eastern. Then for all of our pro folks, we're coming back after that with a great guest to hold court on all things unusual activity with the return of options oddities. Glad to see so many of you love it, are enjoying it, are joining us on the pro side. Check out that show as well as our pro Q&A and a whole bunch more. You know where to go for information on all of that. TheOptionsInsider.com/press or /pro. We're telling you where to go and what to do so you can join those programs as well. See you back here tomorrow for those shows, and then back again next week all the way to Thursday and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.